Right now, someone in Africa is quietly building wealth. Not by moving abroad, not by waiting for their government, by understanding money in a way that their school never taught them. Today, I'm going to show you exactly how they are doing it. The West has a financial playbook, and it was written for the West, for their currencies, their stock markets, their tax systems, their inflation rates. If you follow that playbook in Africa without adaptation, you may lose. Today, we rewrite the playbook. For here, for now, for us. Here is what we cover today. Why African economies require a different wealth strategy. How to protect your money from currency devaluation. Where Africans are actually building serious wealth right now. What mobile money and fintech are changing about investing access. How the diaspora can build wealth at home from abroad. And the generational wealth mindset that changes everything. Stay until Chapter 6. That chapter is the one nobody talks about openly. Before we dive in, drop a comment, just one word. What country are you watching from? Every answer shapes what I create next, and it takes you 3 seconds. Ready? Let us begin. Here is the problem most African finance content ignores. The standard advice is this: open a savings account. Invest in the stock market. Hold for the long term. That advice, built for someone earning dollars or euros in a stable economy, does not translate directly to someone earning Tanzanian shillings, Nigerian naira, or Kenyan shillings in a high-inflation environment. Here is why. The average annual inflation rate in many African countries runs between 8 and 25%. In some, it has peaked far higher. A savings account in these environments that pays 4% interest is not building wealth. It is losing value, slowly, while feeling safe. The wealthy in Africa understand this. That is why they do not keep their wealth in local savings accounts. They hold assets, hard assets. Things that either retain value against inflation or grow faster than it. Land, business, USD-denominated investments, commodities, foreign assets. The strategy is not exotic. It is rational once you understand the environment. I am not here to criticize African economies. Every economy has its challenges. I am here to give you the tools to build real wealth inside the reality you are actually living in. Not the reality of a finance professor in London. The reality of someone in Dar es Salaam, Nairobi, Lagos, Accra, Kampala. Let us start there. This is the chapter most financial creators skip, because it is uncomfortable. But it is the most important one for anyone building wealth in Africa. Currency risk. When your local currency loses value against the dollar, your savings lose real purchasing power. Even if the number in your account stays the same. That is not a savings problem. That is a currency problem. Here is the tool wealthy Africans use. Dollar-denominated assets. Investments that are priced in or tied to strong foreign currencies. This does not mean you need to move your money abroad illegally. It means choosing investments available right now that hedge against local currency weakness. U.S.-listed ETFs accessible through global brokers. Dollar savings accounts where available. Assets priced in hard currency. In Tanzania specifically, the shilling has depreciated significantly against the dollar over the past decade. Someone who put their savings into Tanzanian shillings 10 years ago and did nothing lost real value. Someone who converted a portion to dollar-denominated assets or real estate in the same period protected and grew their purchasing power. Same country, completely different outcome. Strategy made the difference. Gold, another tool that has protected African wealth for centuries. Gold is priced in USD globally. When local currencies weaken, gold often rises in local terms. You do not need to buy physical gold bars. Gold ETFs, digital gold platforms. Fractional gold savings. These are all tools that even a small saver can use today. Start where you are. Hedge what you have. Let us talk about where the real African wealth builders are putting their money, not theory. What is actually working? Right now. The first and most time-tested: land and property. Across Africa, urban land is one of the most reliable long-term wealth stores. Cities are growing. Demand for housing and commercial space is rising faster than supply. The person who bought land in Dar es Salaam, Nairobi, or Accra 20 years ago built generational wealth. You do not need to start with a full plot. Land buying cooperatives, joint family land purchases, REITs, real estate investment trusts, available on local stock exchanges. These are accessible entry points for people who want property exposure without needing the full purchase price. Land has fed African wealth for generations. That has not changed. The second category, local stock markets. The Nairobi Securities Exchange, the Dar es Salaam Stock Exchange, the Nigerian Stock Exchange, the Ghana Stock Exchange. These markets are smaller and more volatile than the S&P 500, but they offer access to Africa's fastest-growing companies in banking, telecoms, agriculture, and consumer goods at valuations that global investors are increasingly noticing. The third category, business. In Africa, entrepreneurship has historically been the fastest path from poverty to prosperity. Small businesses, family businesses, trade, agriculture, manufacturing, distribution. A business that solves a real local problem and does it better than anyone else is an asset that compounds differently than any stock. The knowledge, relationships, and systems you build cannot be inflated away. The fourth category, global index funds through international brokers. Platforms like Interactive Brokers, IBKR, and others, now accessible to African investors, allow you to buy U.S. and global ETFs from anywhere. This lets an investor in Kampala participate in the S&P 500's returns. In dollar terms, protected from local currency weakness. This is the quiet revolution in African personal finance. And most people do not know it is possible. Africa did not get left behind on financial innovation. Africa leapfrogged. When the West was still building physical bank branches, Kenya built M-Pesa. When the West was figuring out mobile payments, Tanzania built Tigo Pesa, Airtel Money, and M-Power. When most of the world was still debating financial inclusion, Africa was already doing it, through the phone in people's pockets. M-Pesa alone processes more transactions than Western Union globally. Think about that. A mobile money platform built in East Africa handling more value globally than one of the world's oldest money transfer companies. Africa is not catching up to financial innovation. In some areas, Africa is leading it. And the tools this revolution built are now investment vehicles. M-Shwari in Kenya, and SSF Mobile Investing in Tanzania. Hiza app, and Ndovu app, Zimel. These platforms are bringing micro-investing to African mobile users. You do not need a brokerage account or a minimum of $1,000. You need a phone. A few hundred shillings. And the habit of investing, even small, consistently. The infrastructure is here. The question is whether you are using it. The fintech wave is not finished. Insurtech, Agritech Finance, SME lending platforms, digital SACCOs. Buy now, pay never schemes. The responsible side of fintech. These tools are being built by Africans for Africa. The investor who understands this ecosystem and positions themselves inside it is positioned for the next decade of African economic growth. Study your ecosystem. Invest in what you understand. If you are watching this from the diaspora, this chapter is specifically for you. Africa receives over $90 billion in remittances every year. That is more than foreign direct investment and foreign aid combined. African families in the UK, USA, Canada, Europe, and the Gulf are the single largest source of capital flowing into the continent. But most of it is consumed, not invested. Here is the shift that changes everything. What if 20% of every remittance you send was directed to an asset at home instead of consumption? A plot of land, a local business investment, a unit trust, a SACCO contribution, a contribution to a family building fund. Over 10 years, that 20% builds something. The other 80% still goes to family support, but the 20% compounds. The diaspora also has something powerful: access to dollar income in a high-inflation environment. A salary earned in USD invested into African land, stock, or business benefits from two growth engines simultaneously. The dollar value of the investment grows, and if local asset prices rise in shilling terms, you benefit from currency appreciation when you eventually convert back. This is the diaspora wealth multiplier. Most people do not use it consciously. The mistake diaspora families make most often: sending money home with no structure, no plan, no separation between support and investment. The solution: a family investment meeting. Once a year, even over a video call. Decide together. What is the support budget? What is the investment budget? Who oversees the investment? What is the 10-year goal? The families that do this build something. The ones that do not restart every generation. This is the chapter that most people never hear, and it is the one that quietly builds more sustained African wealth than any investment strategy ever will. Generational wealth thinking. In African tradition, wealth was never just individual. It was communal, inherited, extended. The land belonged to the family. The business employed the family. The education of one child lifted others. That wisdom is still right, and it is being lost. Before we close this chapter, the real gem hasn't even dropped yet. What comes next could completely change the way you see money, side hustles, and building wealth. In the next video, we're going deeper, smarter, and more practical. I'll show you the exact moves most people ignore until it's too late. So don't disappear into the internet jungle. Make sure you watch part 2 right after this, because that's where the puzzle finally connects. See you in the next video.